Hi, and welcome to our Impact Investment and ESG investment panel session for Emergence 2021. My name is Steve Torso. As I sort of mentioned earlier during today, I'm the founder and managing director of Wholesale Investor. This panel session is really important to me as, we've been talking amongst our team, and the area of impact investment, the area of ESG is something that's quite important to us. And we've seen so much momentum now around the world in this area, and it really hasn't become that sort of apparent in Australia yet as far as the opportunities. And I know there's a lot of questions that investors have around this. So we've assembled an incredible panel session for today that covers both the investment, the commercial, the family office aspects, and obviously the objective from our side is to provide you with as much context as we possibly can in the session. So what I'm going to do is I'm going to ask the panelists. So we've got Giles Gunesekera, who's the CEO and Global Impact Investment Initiative. We've got Jeroen Bolluijt, sorry if I got your name wrong, Jeroen, who's the CEO at Exit Founders. We've got Ling Lim, who's the head of APAC Business Development at 500 Startups. We've got Richard Romanowski, who's the co-founder of Planet Arc Power and eleXsys Energy, and Pepe Morales, who's the manager at Impact Investment Group. So to kick off this session, I'd love for each of you just to give a quick introduction about yourself and your area that you operate in. So starting with you, Richard.
No pressure, right off the start. It's a pleasure. Thanks, Steve, and thanks for being here. So I guess from an impact investing perspective, myself and my co-founder are high net worth individuals. We've invested $10 million of our own money to create a for-purpose-driven company to decarbonize the world. So that's what we're all about, and our company is now raising more money and going global. I'm happy to explain that more as we go forward.
Fantastic. Thanks, Richard. And Ling.
Thanks, Steve. Hi, I'm Ling. I'm the head of business development APAC at 500 Startups. We are an investment fund, one of the world's most active investment fund, and we also help build ecosystems as well as help with corporate innovation. In 2020 itself, we actually established our global flagship fund ESG policy, which helps 500 Startups mitigate risk in investments, invest in diverse and inclusive teams, support the SDGs, and this is throughout both our investments as well as the startups that come through our programs.
Thanks, Ling. Giles.
Thanks, Steve, and welcome everyone to this session. My name is Giles Gunesekera, and I'm the CEO and founder of Global Impact Initiative. Global Impact Initiative works with superannuation funds, pension funds, family offices, private banks, high net worth individuals to create impact investments. And that's investments that have the dual purpose of both financial return, positive financial return, and positive social impact. Everything we do is measured, mapped, and monitored to the UN Sustainable Development Goals. Global Impact Initiative is also one of the only companies in Australia who is a UN lead, and we're the only UN lead company in the world that is a specialist impact investment business, and look forward to the discussion about impact investing and ESG throughout this conversation.
Thank you, Giles. Jeroen.
Hey guys, my name's Jeroen Bolluijt. Most people actually refer to me as JB, so we can then skip my last name. And,
thanks for that. I'll remember that for the end.
I'll just mention it. A CEO and founder of Exit Founders. We're actually on the other side, so we build impact enterprises. So those enterprises that have a financial return as well as a social and environmental return. We do that all the way from startup up to exit. We don't tend to do IPO, we do tend to do buyout. So we're very much there with the founders to work at all the different impact and revenue streams, and impact investing is one of them.
Thank you very much, Jeroen. Pepe.
Hi, nice to meet everyone, and thanks again for being here. I'm Pepe Morales. I am a manager at Impact Investments Group. I work in product development and strategy formulation. Impact Investments Group is an Australian impact investment fund manager. We exclusively have assets that contribute to positive change in the environment and society, mostly focused in Australia. And we manage around 600 million Australian dollars. And most of our assets are invested in green property, The next sort of strand would be renewable energy, mostly solar farms. And we have a small, in comparison, in terms of size, fund compared to the other assets in impact venture capital. And recently we've started doing multi-asset diversified mandates for institutional investors. So we have a mandate from Western Australian Super. As I mentioned, all focused in Australia, and I can talk more about some of the specific areas that we target and how we go about it. Small note, before this, I've had exposure to international development and impact investment in different locations in the UK, in the US, in Latin America, in Asia. So I'm very happy to also talk about that more personally, aside from the work of IIG.
Fantastic. Now, just as a starting point, now this is the first question that investors, really sort of want to sort of understand your perspective on and how you sort of look at things. But how do you balance a financial return with a social return? And I suppose we could start with yourself, Giles, on that.
Yeah, thanks very much, Steve. It's interesting you asked that question firstly to me, because our tagline of our business is balancing purpose with performance. So for us, it's very, very easy. It's embedded into our business. Everything that we do has to have both a financial return and social impact. We find in working with investors that they always focus or typically focus on the financial return first and foremost, and really to make sure that what they're investing in, what we're about to create for them is not going to lose them money. But what we find over time, Steve, is that there's less and less focus on that financial return and much more focus on the social impact. So, we have investors saying, okay, well, if I can sacrifice a bit more of my return, what other social impact are you going to create for me? How many other babies are going to be vaccinated? How many women are going to get jobs? So first, and really that comes back to one of our reasons for being is that we want to mainstream impact investing, but we want to do it at scale. And one way of mainstreaming something is for it to work. And that's why we're very focused on, let's make sure that it works financially. Let's get really granular in the measuring of social impact. And so investors can see the two coexisting together. But ultimately over time, people will be less focused about the returns and much more focused on the social impact. And that's been our learning and through the discussions and developments that we've had with clients.
Interesting. And Jeroen, what's your approach to this?
It's a very common question, and I always challenge the question because it comes up for founders and it comes up for investors. To me, the question is, what are the minimums you want as a financial return or social return? And then which one of either financial, social, or environmental, which one do you want to optimize or maximize? Because there are trade-offs. If you want to push it hard, there will be trade-offs between financial returns, shorter term, longer term, and or non-financial return, however you want to split it. So I think the further clarity in the discussions I have with enterprises as well as investors is saying is, tell me your minimums, tell me what you absolutely want as a return. After that, you've got choices. Which one do you want to maximize for? Because I don't think there's no such thing as balance. I think you have to push and maximize for one or the others.
Well, Giles mentioned, I think it's a great point. You mentioned that over time, people's perception starts to change. And is that because that as part of your process, you're actually reporting on the actual, I suppose, the impact that you're having, and that's what starts to shift people's psychology? I suppose that's to you, Giles.
Yeah, sorry, Steve. I was waiting for Jerome. Yeah, absolutely, and that's really the power of reporting. People are always focused on what they're receiving, what's being reported on, and because you can get really granular. And Jerome knows this through one of the other hats that he wears through another organisation that we partner with. Getting into that granularity of the social impact and being able to really show the people, the communities that you're serving and that you're helping as a result of your investment is really mind-blowing. And it's really a game changer when it comes to investments, because people are able to pick up, that statement and say, yes, I've earned a 10% return, but I've also helped, this number of people, this number of children, these number of women, et cetera, et cetera.
Interesting. And Pepe, a question for you. I assume you're one of the largest fund managers in this area in Australia. Is that correct?
Correct. Within the impact investment field, and let me make clear, there's I think a significant difference. We only invest in unlisted assets. So we don't invest in equities, in green bonds, in any listed assets. And I think that's true of the impact investment sector as a name. I would say all of the other ESG screened strategies and sustainability and green bonds.
ETFs,
I call that responsible investment. And within that, impact investment is a part of that. But to be clear, there's an interesting statistic that it's escaping me right now from RIA, the Responsible Investment Association Australia. And the scale is something like literally 90 to 95% of the assets invested in these like listed equities, ESG strategies compared to this private market stuff. Within that, we are the largest.
and what I find really interesting is, because I did a panel session about this in the UK, and obviously in the UK, this area is massive, right? And typically Australia is about 2 years behind the UK. And so I did some research, and correct me if I'm wrong, but I saw less than 10 defined impact investment funds in Australia. How have you seen the attitudes change from investors, from your funds under management, et cetera, change over the last sort of 3 to 5 years?
I'll try to make it very brief, and also touching on the point you made, because I worked in the UK. The government backed specifically social impact investment and green investment to an extent through private banks, but partly funded or incentivized by the government. And that literally grew the number, and it was aimed at intermediaries, right? Like creating the intermediaries, creating the pipe plumbing, not just directly the companies as well, right? But the number of players increased and the number of assets, and the whole point as well was to catalyze more commercial capital, or capital that is interested but hasn't found a way to invest. In Australia, there's been pushes to do something like that, but that's very powerful. So indeed, in the UK, that grew. In the US, I'm less familiar in that regard, but just because the market's so big there, and the sort of like foundations and the endowments and blah, 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 like it's grown as well, but there wasn't such a distinct difference like in the UK with this effort. However, in Australia, within its context, it's grown significantly. To your point, there are now probably 10 or 15 impact investment fund or fund managers in sort of way. 5 years ago, there was 5, right? And they were, and you know, so it has grown, and there's certainly growing interest, I'd say, specifically on the climate agenda. And if I may contribute to my answer to this question about balancing financial and impact returns, I would almost pose it with a couple other questions. It depends, and it depends on what you want to accomplish for impact. I think it's very important to acknowledge that, as Jeroen was saying, there's trade-offs, but they're different depending on where you see it. And it's important because it's a values-driven decision, right? It's what you relate to or what impact you want to create. So that matters, and it depends on that. And the other point is to remember that impact is subjective. Our financial return is not. And so it's very hard it's almost like measuring apples with pears. And you need to just be mindful that to impact, there's more than just a metric. There's a story and there's a reason for it. And so you need to take that into account, and you can't price that as such. That would be my sort of view on that.
Steve,
Thanks, Pepe.
May I cut in and say, so we, the UK has been huge for us. So we're moving our head office from Australia to the UK as part of the huge amount of interest in the UK in terms of impact investment. So, you know, in Australia, it's there, but the quantum is 50 times more in the EU. So we're raising probably 50 million or more out of the UK and Europe over the next few months. And a lot of that has already been raised now to help us expand our so we're going global in our technology to decarbonize the distribution grid. So that's technology invented here in Australia. We spent about $35 million Australian of our money, and then other investors' money to get this far, and we're raising another 50 million. And the UK is so what's it called?
Aggressive.
Yeah, that's the word for it. They're chasing us.
Yeah,
it's the other way around. It's phenomenal. I can tell the story. I mean, they're actually chasing us to go move there, so they can give us money. And a lot of it is as you were saying, Pepe, the UK government, there's a 40% tax credit for people who invest into us, which is just phenomenal. I mean, these guys almost almost break even from day one when they throw money invest into us. So thank you. It really makes a big difference.
And Ling, a question I've got for you, you mentioned about 500 startups, that it's really important for you guys to have an ESG aspect, which is obviously environmental, sustainable, and good. What are the factors that you're looking, like you are one of the biggest investors on the planet. Like, what are you looking for in companies? How are you sort of monitoring those metrics of those companies that you're investing into?
Yeah, thanks, Steve. So first and foremost, I kind of want to take a bit of time to draw the distinction, right, between impact investing and ESG, and maybe normal investing. So if you see normal investing and then you take impact investing right here, ESG policies is kind of right in the middle. So, it's often used interchangeably, but impact investing, you focus on very specific impact goals, whereas ESG policies, which is environmental, social, and governance, is not limited to a particular industry or a market, but rather the focus of that policy is, it could be to increase diversity in the workplace, to minimize environmental destruction, form better labor practices, and whatnot. So how do we adopt it at 500 startups? So just to clarify, we are not an impact investor, but we've established an ESG policy because we see ESG as a framework, a guidance, kind of like a set of standards, right? That we can get our investee companies to look into and to adopt and apply over time. So it doesn't determine our investment decisions. We don't screen for and we don't invest only in startups that are impact-based. However, to your question, how do we use this framework, standards, and guidelines? We actually use it at 3 points in time. The first is before we invest in them, at the time we invest in them, and post-monitoring as well. So before we invest in them, there's a set of questionnaire that we actually go through. And there are obviously really big red flags there, things like child labor, things like pornography, those we immediately strike off. But other than that, the questionnaire helps us understand, for example, do you even have a diversity policy in place? Do you even have, do you know your gender stats count in your company itself? Do you even have an employee handbook? And for a lot of startups in Southeast Asia, they probably don't, right? They don't even have an employee handbook. What more talk about monitoring carbon emission and monitoring usage of that? So at the very start, this questionnaire helps them think about it. This is what an investor is looking for these days. And so while the answer at the onset could be no, 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 what we do is, as long as it makes financial sense, commercial sense, when we do invest in them, we actually sit down with them and help them map out and identify areas in which they can do better. Following that, we actually have a portfolio manager who could sit down with them and help monitor those as well. So there is regular reporting involved there after we invest in them. And there is also a portfolio manager who could help them really implement some of these policies to get them to actually increase their level of consciousness there.
And what have you seen as being the impact as far as helping the company? Because I imagine because you guys actually monitor it and because you actually set standards for it and because there's guidelines, you see the impact firsthand, like within sort of 12 to 18 months. So what are the trends that you're seeing within the companies?
Yeah, I must caveat that we started this policy last year in 2020, so it's still relatively new. We ended 2020 with a report, actually. So the report is publicly available. About 90 plus of our startups actually responded to it. And so while we haven't been able to track the pre and the post, and then we haven't had enough time to really effectively track that, what we did find was that statistically, out of this 90 plus respondents, 30% of our portfolio companies have a female co-founder on the board. In terms of statistics wise globally, that stat is actually more like 10%, right? But for us, we have a 30% stat there. We've also seen them actually, at least 70% of them said that they now have an employee handbook. And in terms of environment, I think environmental is one of the ones which is unfortunately the lowest at the moment, because we also invest in very early stage startups.
Yes.
So for early stage startups who are working from home, I mean, it's unlikely that they're thinking about the carbon that they're producing. But will they think about it? That's also a survey that we currently ask. And increasingly that number is yes, they're going to be implementing it as part of their growth strategy.
Fantastic. And I suppose one of you mentioned about the sort of environmental approach. So the question I suppose I have is, what are, like when you're thinking about the ethics and environmental approaches, they vary widely across different countries and different communities. So how do you provide a solution that actually works for all, or where does that framework come from? And I suppose I'll start with you, Jeroen.
To me, the frameworks I would suggest people would use are very results-based or outcome-based. So they would define what it is you're trying to achieve, not potentially stipulate how you would measure actually hitting that. Most of the frameworks I see are actually very conceptual and give you groups, like for instance, environment, sustainable governance, but not so much what it is you're trying to achieve. So an overlay of that would be things you could measure, like well-being or like degrees, 1.5% degree increase in Celsius, so something very tangible. That's where I would start. Then find one of the many frameworks, and there's been frameworks been issued for by many groups at this point in time. Find the one that fits well to measure some of those different things. And then if you are more of a global organization, I would work on what I would call the last mile problem, which is how you would replicate a company and/or solution. You got your core, you know what it is, but you always have to adapt it to a specific community. So even in impact measurement, sometimes we would use tablets and you would do surveys, but when you go to Africa, it would be through pictures and it would be through a local language, some of those different things. So those to me would be the 3 layers. So be really clear about what it is you're trying to do, how you measure it, then pick the frameworks and know which ones you want to select, and then always adjust based on that last mile principle.
Thank you. Now I've got a quick question for Pepe and also Giles. Can you give us some examples of companies that you've invested into, just to put into context I suppose how you see the definition of impact and the reason why you invested into those companies? Because I think it'll help provide a context as to what you're actually looking for in opportunities. Starting with you, Pepe.
Right. So one of the examples, I'm trying to think, I want to just make a quick thing, which answering the previous question, like it's very hard to make a standard between climate, let's just say environmental and social impacts. They're very different. So your intentions can be the same, but the measurements are, it's very hard to make them the same. I just want to be clear about that. And there's a big divide between those two just because of different problems, I would say. In the climate side, we invest in renewable energy and it's solar farms. And I dare say it's easier, not that it's easy, but there's a clear reductions emission and gigawatts generated, on zero carbon that you can measure. And you can almost put in a currency form that I was saying that it's hard to do that, right? In the environmental side, it's easy because you have a measurable thing. On the social side, I think it's harder to do, again, because it's subjective. But an example there, this was a very innovative project that we did, is it's a structured loan to a company that finds employment for people in the spectrum of autism. I really like this. The way we structured it is there's an impact link performance. It's a discount essentially on their interest rate, right? So they get a benefit if they do more impact. And I know it sounds fairly simple, but you'd be surprised how little it's being done to actually integrate them, again, from a financial point of view. And in this case, it's about the number of people they employ. So again, it's an easy, agreeable sort of measure that we use, but the outcome goes beyond that. And the example just quickly is the company charges for this consulting service, essentially. People that used to be carers or were part of the, providing just a service are now coaches. And so they generate value. And then people on the spectrum of autism, which again, a lot of them were probably just in the, through the social services as a cost to society in a way, which not that they are, but the way it's structured it is, now are producing value. And particularly on software testing and other quality control functions, they literally have 3 times the capacity of a normal human to some extent, and the extreme example, right? But so they increase productivity to the company. So value gets generated everywhere. This literally is the best example I have. I wish there were more like this. There's actually few and far between where there is this direct win-win, so threaded win-win. So it's almost a bit unfair that I'm sharing this example because these were good ones of success, but there's many more that are failures, to be clear.
But don't worry, Richard will be talking about his solar projects straight after this, as a passionate founder that he is. And yourself, Giles.
Yeah, Steve, I'd rather than talk about a company, I'll talk about a strategy because I think it better illustrates what we're looking to achieve. So, and I totally concur with what Jeroen was talking about before around around the benchmarks and the need for measurement to be outcomes focused. I know that's certainly an approach that we look at first and foremost is what's the outcome that we're trying to achieve, and then build a framework around that. So there's the UN Sustainable Development Goals, there's IFC guidelines, there's various other guidelines that you can then use to then measure, map, and monitor to. But ultimately, what is important, what is most important, and to pick up something that Ling was talking about earlier, is stakeholder engagement. There's no point building these impact strategies for what you think a community needs or what an economy needs if you're not actually talking to the people and to those stakeholders and the ultimate beneficiaries. So that's the one thing that I'll add to Jeroen's excellent comments before. But in terms of an illustration, if I could, a really good illustration of an investment is our gender equality fund. So we started with the basic premise, and it sounds really basic, but it's just not happening, is that there needs to be more women having the opportunity to work, being educated, better health, better nutrition, et cetera, et cetera. But what we were very focused on was how do we not only help women, but also help girls and help girls progress into women. So we embarked on a project, and this was took 3+ years, researching, talking to lots and lots of women, talking to other stakeholders. And basically we came up with an investment thesis, which was, let's invest in companies that are progressive to women in the workforce. So companies that have a high percentage of women on the board, women in senior management, family-friendly policies. Nothing we do at GII ever involves alcohol, gaming, tobacco, weapons, fossil fuels, or adult entertainment. So we screen all those sectors out. We appointed a fund manager. In this case, we appointed a very large, successful fund manager in Robeco, who are based in Rotterdam, and their investment teams in Zurich. And they go off and buy these companies that are progressive to women in the workforce and look through a whole bunch of quantitative and qualitative characteristics. What we then do is the investors opt in, and they agree that they will, and there's a few different versions of the product, but I'll just talk about the main version. The investors then sacrifice their income. So if Unilever pay a dividend, the investor says, I don't want that dividend. I want that going to a whole bunch of girls' charities. These girls' charities are Malala, Grameen, UNICEF, UN Women, and World Vision. And the money that goes to those charities, we then measure, map, and monitor the social impact of that money. So we don't give any money to Malala or Grameen or UNICEF till we know how they're going to spend it, how many babies' lives are going to be saved, how many girls are going to be educated, what countries those girls are going to be reside in, et cetera, et cetera. So that's hopefully, Steve, a good example of starting with an investment thesis, building that thesis by incorporating both the public and private sector, and it's very, very scalable as well. But then also incorporating not-for-profits who are sensational at delivering that social impact on our behalf and on behalf of investors.
Brilliant. And Ling, a question I've got for you. Do you feel like the drive for and importance of ESG is being driven by the sort of startup ecosystem, or do you feel it's being driven by the government? Where do you feel it's come from? And obviously it's an important thing, but like the thing, I'll go to the rest of the panel session about Australia, but how do you feel that, where do you feel that's being driven from specifically in Singapore and ASEAN?
Yeah, I think unfortunately right now it's still driven from the investors' point of view as well as from the government's point of view. And I say governments as well, they too affect the other industry players and other industry stakeholders, yes. And all that kind of trickles down to having the startups thinking about it and implementing some of these policies. So if I just break that up a little bit, right? If we look at Singapore in particular, so Singapore's government's latest Singapore Green Plan 2030, it's basically a step in that direction. It contains targets that will help strengthen our government's commitment to the UN's 2030 Sustainable Development Agenda and the Paris Agreement, of course. And it helps Singapore achieve its long-term net zero emission goals. Which is really interesting given that we are not actually one of the largest producers and emitters of carbon. In fact, just 2 days ago, we announced the budget 2021. And in that budget itself, first and foremost, they announced that they'll be issuing green bonds on selected public infrastructure projects, because we do believe that as a financial hub, the government issuing green bonds just means that there will be higher liquidity and be able to attract higher investors, more levels of investors to this field. Secondly, there's also incentives being issued for electric vehicles. So coincidentally, about maybe 2 weeks ago, Tesla announced that it was finally going to sell Tesla cars in Singapore. And then 2 days ago, the government actually announced a huge number of incentives for that. So my husband actually went and put a down payment on the Tesla yesterday, because the aim is over next couple of years, they are going to be replacing all the cars in Singapore. And the government, how it works is that initially they give you a bit of a carrot, right? Incentives, makes it cheaper.
Is that like cheaper license plates or something?
Yes. So we have really high license plates,
yes.
COEs. They are also likely going to be reducing that for electric vehicles. Setting up all these charging points so no one can complain that they can't have an EV. And so a lot of these things are being pushed, I feel, by the government policies itself and by the government itself. Similarly, if we look at the trend that's happening in some of the industries, so let's say we talk about climate, we talk about environmental, the E, right, in ESG itself. This affects not just startups who are, say, producing renewable energy, but it affects corporates who are operating everything from the built environment space to the mobility space to the obviously wastewater management space, real estate players, maritime players, shipping ports, everyone's affected. And why are they starting to pay attention to it? Again, it's due to regulations, right? You have regulations in the maritime industry who is really pushing them towards neutralizing carbon emission. And because of that, they now have to look for startups who can then help solve that. So I think that, overall, if you look at what's really going to be encouraging the startups and companies to actually look and deploy, more resources into implementing ESG policies, it does come from the investors level, and it trickles down. So even just I know I'm talking a bit too much, but if I just close the loop a little bit.
And there's two layers to that, right? You've got the institutional investors, obviously like Giles and also Pepe, but really, let's not forget where the biggest drive, one of the biggest drives, this has been retail investors, and more importantly, Gen Z. The millennials and Gen Z have really dominated the drive for especially ESG when it comes to companies. And, you just mentioned Tesla, and that's a perfect example of, a company which has captured the attention really of that sort of millennial and Gen Z because of their purpose-driven business. And look, I know as a founder, that purpose-driven aspect is important, right? Because staff actually want, and we talked about this on another panel, it can be an actually important aspect when hiring, that companies are actually having a significant impact in the role in which they're playing. Now, I won't ask this to you guys, because I think I know the question about, do you think the government's been active enough in Australia? I think that's a bit of a wasted question. What I would love to ask is, how do you see this next 5 years playing out? What do you see the big areas as winners coming through? Whether it be in, you mentioned electric vehicles, whether it be all the peripherals that sit on the side of electric vehicles, you mentioned charging stations. I know that there's, for example, there's car washes that have been converted into car washes / also charging stations. And obviously I'm talking a little bit to give you time to think about it, but what do you see as the next big winner in the next 5 to 10 years? How do you see it playing out? What's your world that you actually see with this momentum that we're seeing? And as you said, being driven from the investor side. Now, because it's such a nice, light, easy question, I'll start with you, Giles.
Very much appreciated, Steve. Thank you for that long introduction as well. Definitely, Steve, anything climate related. Interestingly, about 12 months ago, more than 12 months ago, we've been developing what we initially started off as a renewable energy fund, which we will outsource to fund managers to manage. And just over time, it's morphed into climate because one, it's a much broader investment mandate, and two, investors are just looking for climate solutions. So that enables us to do the traditional solar, wind, battery, wave, but also, vertical farming, carbon capture, all these really interesting, climate technology opportunities, that have really sprung up over the last, over the last few months, few years. So definitely climate, and also gender and diversity in general. There is absolutely no doubt that there's a long way to go. There's a long way that we all have to go in terms of getting proper gender diversity. And quite often I'm asked, why just gender, Giles? Why not diversity in general? And my response is, you've got to start with the biggest part of the pie, which is not being looked after, and that's gender. So, we currently have 50% of the population that do not get the same amount of opportunities as the other 50%. So let's start there, but without a doubt, we have to move to broader diversity and what represents our community. And, something that I'm, quite ashamed of as an Australian, and working in financial services for 25 years, we are on the doorstep of Asia. We have been benefactors of China and the India growth story, but yet when you look at our top 10, top 20, top 100, top 200 listed companies, there is a very, very small proportion of women, but there's even a less and a much smaller proportion of subcontinental males or females, Southeast Asians. And it's not like they're not there. They're not in the community. They're out there in the community. They're out there in the business world and other sectors, but they're just not sitting on boards because there's just not enough attention being paid to having proper diversity strategies in place. And we all know that if you have diverse views and voices in the room, better decisions get made. It's an absolute guarantee.
Very fair. And yourself, Richard?
Thank you. I was just going to say, we find the climate change decarbonization is actually coming from the ground up. The local councils, the local cities are doing it, and we're working with them. So our technology for Pepe, for example, it moves the solar farm from way out in the sticks into the city. So our IKEA flagship site is a 10 times bigger microgrid, 10 times more solar, more batteries. And 100 of those is $1 billion, and that's owned by a pension fund. So that's $1 billion that a pension fund is going to be owning over the next 10 years. But secondly, we're also working in the developing world. So we're finding we almost have not enough arms and legs to deal with all the impact investors. In the developing world, we can take a whole village off grid 10 times cheaper than they can do now with diesel and gensets and everything else. And we're actually facilitating another bit of impact investing where people are willing to put $200 or $300 or $400 million into an impact fund to own and operate off-grid microgrids in the developing world, APAC, Africa, and of course we think that'll grow into billions and billions of dollars, and that's fundamental to decarbonizing the world. Of course, that's our purpose. Remember, I'm a purpose-driven company. I'm an entrepreneur. I care about. I'm answering the question from a different perspective, not from an investor. But from I'm an investor. I invested in the company, but we're focused on the business, right? So we're actually in the front end of the pointy end of the stick, and we're finding that with the right technology, the right business model, there is trillions of dollars to change the world, social impact, climate change, decarbonization, and it's really exciting. I have to say that it's really, for us, we're growing at 1,000% a year almost, so it's huge. Sorry, Steve, your turn.
And I was going to say, the nice thing, and I think about for yourself and also for Pepe, is that you see that crossing line where renewable energy is being able to produce cheaper than obviously sort of traditional energy sources, and that makes a massive difference from the investment side. Jeroen, your thoughts on the next 5 to 10 years?
If we take, in my personal view, if you take a 5 to 10 year view, it's not going to be climate change for exactly what you just said. There is already the price difference between what you currently pay and the true price with all the impacts calculated in is actually not that much different. There's lots of other areas where the true pricing principle and the differences is significantly higher. Therefore, at the moment, it's not a viable option for most organizations. For instance, fuels and biofuels. There's things happening in the food sector and others. I think that the key problem behind that, and by the way, true pricing principles is something that exists, that's calculated. And then, for instance, even Bill Gates is using that in terms of green premiums. So one proxy on where innovation should go and where R&D money might be spent is using this true pricing principle to work that out. I think when you study that, when you look at it, probably the next key global challenge will be lack of biodiversity, which is a way more complex problem than a relatively straightforward, still complex climate change issue.
Yeah, I love listening to podcasts by Kathy Wood, where they obviously sort of they talk about Wright's Law, and obviously, one part's the energy production from renewable energy. The other part is obviously the manufacturing of battery cells for storage and how much cheaper that's become over time. And then obviously having that ability to not only bring the price of production energy down, but also the storage of it, I find quite interesting as a theme. Pepe.
Thank you. Sorry, I violently agree with Jeroen in that, and I feel bad because you kind of stole my thunder. But I think it's very important to me. Fundamentally, the way you can look at impact investment is: are you pricing in the externalities that have been ignored for a long time? And often there's a cost to pricing in those externalities, and that's the challenge for a lot of these things to work. However, also echoing what people have already said, but how I see it is in climate, there's two things. One, the problem is now real for everyone. It's not out of the goodness of your heart. It's an issue that everybody needs to solve. But also, which greatly facilitates this, not only can you price in the externalities, you actually have a financial benefit because of the reduction in cost. So that's a very powerful combination. In Australia, I'm not going to say about the government anything, but there's definitely commitment from super funds, from companies, and I think it will come from the government for net zero emissions by 2050. It's a simple one. People can sign up to it. The technology is going there. So it's funny. My passion is on social and like inequality. I'm from Mexico. To me, it was very obvious for a very long time, but I can't deny it. The proposition and the urgency of climate, the climate agenda is huge. Again, echoing what Jeroen said, in Australia, I think there's a big, I would call it like a localism agenda, and it has to do a lot with biodiversity, but also regenerative farming. So I think that's in Australia like a big thing. And the government has done something, or a few things. Sorry, the government has done a lot of things. I'm not who's to judge, but specifically, they've restructured the NDIS, the disability sort of incentive scheme, and the way it's regulated in Australia. And that's boosted significantly the cash flow to the disability sector, disability housing in particular. So that's, I would say, on the social side, the fastest and largest developing sector in Australia. And for the next 5 or 10 years, there's going to be a lot of opportunities to invest there.
Thank you very much, Pepe. And Ling, I'm really looking forward to hearing from you, because you guys, like, given how many entrepreneurs and founders that you work with, I think 500 Startups has an incredibly unique position to see what is this next generation of innovation look like and what the direction is headed.
Yeah, and I can go on this forever, so bear with me. But precisely because we are sector agnostic. And even though I said we aren't impact investors, the truth is we have invested in a lot of startups who are aligned to, the SDGs. For example, we have 260 companies that align with quality education. We have 30 that aligns with climate action itself. So in terms of where we see the trends, I think that also differs from country to country. Again, we're global. We've got 2,500 portfolio companies in over 70 countries. So the trends in the US, very different from the trends, I wouldn't even say Southeast Asia, because Singapore and Malaysia look at completely different things. So a couple of things, right? I think first and foremost, echoing what the list speakers were saying in terms of diversity. Last year itself, we launched our Female Founder Hub, as well as a Black Founder Hub. So these are, again, two things that we are actively tracking. We are putting out education, resources, mentoring support directly aimed at both categories of the Black founders as well as female founders. The second thing is, I think, access to quality education, which is a really huge agenda here in Asia, in specific countries in particular. We might not see that as much in Singapore, but what COVID-19 definitely unearthed is that unequal access to quality education, right? Not many kids could go to homeschooling. I think we saw that in the US, but even more so in places like Indonesia and Malaysia itself. The third thing is sustainability, or more specifically, I would talk about agri and food tech. Agri-tech in countries like Malaysia and Indonesia, food tech in places like Singapore. So sustainability in terms of, again, access to sustainable food. Again, our supply chain, the breakage, the flaws in our supply chain were all uncovered during COVID-19. And more the governments as well as the corporates here are realizing that they need to finesse, they need to strengthen that supply chain and to diversify the sources of, food and agriculture, wherever it's coming from. But more importantly, it's also the impact that agri-tech and the impact that food is having on the environment itself. So, to give you an example, we actually have two investments that I really like. One in Indonesia is called Mycotech. So they basically make consumer goods out of mycelium, which is mushroom leather. Another one is Energaya. So Energaya is based in Bangkok. What they do is they actually produce spirulina as an alternative protein out of waste. So they turn your top of your buildings, right, your rooftops, into all this like spirulina tanks that can then be used for aquaculture. We've also got a couple of investments in aquaculture in Indonesia itself, and all even though on the surface it talks about IoT and smart sensor feeding, but what does it do? It ultimately reduces the amount of pollution that you're putting into the sea. So I think those are a few areas, and if I just go on, I think the final thing that we're seeing in the US is responsible tech, right? More and more, where society is seeing tech companies as agents of misinformation, as foreign political interference, and it's really a threat to our ever-shrinking privacy. At 500 Startups, we see ourselves as being in a position to actually help these early stage companies pay attention to all these responsible tech issues so that down the road, they're not only able to attract the right talent, but they're able to survive all this public scrutiny and unforeseen risks.
Thank you very much, Ling. So our time has absolutely disappeared. I just want to say thank you very much to all the panelists. Richard, as you know, I always appreciate the founder's perspective